Hey everyone, welcome back to Corporate Decoder, the place where we try to find some hidden gems in the piles of corporate filings, potentially a little too shiny for our own good. Let's dive in. So MSP Recovery Incorporated has just dropped a current report with the SEC, and while it might not be a full quarterly report, it has got some interesting tidbits about their financial situation, especially concerning their credit facility. The main event here is an update on the 5th of January 2026 regarding a new agreement with Hazel Partners Holdings LLC, which is a pretty significant player in their existing working capital credit line. Alright, so what is the big deal they've entered into what they're calling a Hazel letter agreement? This is an arrangement to get an additional $325,000 from Hazel, specifically to cover operating expenses. Now this might sound like a lot of money, but it is actually quite small in the grand scheme of things, and it is a one-time deal. To understand why this is important, we need to remember what they've told us before. In their last quarterly report, they mentioned this working capital credit facility with Hazel. It is not a guaranteed loan because Hazel essentially decides if they want to give them money or not through something called the operational collection floor. Even more critically, they said back in September that they had already borrowed close to $6 million under this discretionary floor, and there was no more money left, it was tapped out. So this new agreement is effectively Hazel saying, okay, we'll give you an extra $325,000, but importantly, it is a one-shot deal. It is not like any of that borrowing capacity is coming back or being renewed. This is super important to get right. This $325,000 is a special exception. It doesn't mean the whole credit line is back open for business, or that they can borrow more money later. It's just a separate little sum. They are being very clear here, saying that beyond this particular advance, there is no other funding available right now, and they have no real reason to expect any more money from this facility. Now, the company themselves are telling us don't get too excited about this $325,000. It isn't a sign that Hazel is going to keep funding them, or that MSP Recovery Incorporated will be able to cover its bills for long. This money is for a very specific purpose, and it's not a sign of ongoing financial health. Let's quickly look at what is actually trading out there on the market. They have Class of Common Stock trading under the ticker MSPR, and then they have these redeemable warrants, which are basically options to buy more stock. At a certain price, warrants are often a sign of how investors feel about the future potential of a company. They have these warrants with a really high exercise price of over $50,000 each. This is for a block of 4,375 warrants to buy just one share of stock. That sounds incredibly expensive and probably means investors don't expect the stock price to ever reach that level anytime soon. They also have warrants with a much lower exercise price of just under $0.50. That might be a more realistic target for investors, but it still shows a lot of uncertainty about the company's future valuation. And finally, you see the list of exhibits, which are basically the supporting documents for this report. The most important one listed here is Exhibit 10.1, the letter agreement dated the 7th of January 2026, which is the actual document detailing this $325,000 deal. Looking at this filing from MSP Recovery Incorporated, it paints a picture of a company that is really struggling to see. Your dependable funding, they've reached the limit of their existing credit line, which itself was based on the lender's discretion, meaning there was no guarantee of funds in the first place. This new $325,000 injection is a tiny amount in the context of a business, and it is explicitly stated as a one-off solution, not a revival of the credit facility. The fact that they have warrants with extremely high exercise prices, like $50,000 for a single share, is a big red flag. It suggests that the market doesn't believe the company's stock will ever reach such lofty heights. In the foreseeable future, the warrants at a lower price point, about 44 cents, indicate a more plausible scenario. But even then, it points to a valuation that is far from bar. So this report does not contain any major financial tables to analyze on this occasion, but the narrative is crystal clear. MSP Recovery Incorporated is in a tight spot. They are relying on discretionary funding, which is inherently unreliable, and this latest announcement confirms the limited nature of that support. It raises serious questions about their ability to meet ongoing operating expenses and debt obligations. In the near future, there isn't a broad strategy for sustainable growth evident here, rather a series of short-term fixes. The risk for investors is high. Firstly, the lack of committed funding makes the company extremely vulnerable to any changes in its Enders sentiment. Secondly, the market itself seems to be pricing in a low probability of significant future success, as evidenced by the warrant structures. Any investment at this stage would be highly speculative. In conclusion, MSP Recovery Incorporated is facing significant financial headwinds. The $325,000 advance is a mere drop in the ocean and does little to address the underlying issues. of inconsistent and discretionary financing, it is a clear sign of distress and further illustrates the company's precarious financial position. The company's direction appears uncertain at best and potentially unsustainable without a dramatic turnaround in its financial stability or a significant strategic shift. Alright, that is our breakdown of MSP Recovery Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.